How far back can California tax agencies go with unfiled returns? The FTB, the CDTFA, and the EDD, what do they do about unfiled California tax return exposure? Well, let's talk about why California can chase old tax years that you thought were gone. If you have unfiled tax years in California, here's the truth most people simply don't know. California can go back as far as they want, and sometimes there is no statute of limitations at all to them doing so. The Franchise Tax Board, the FTB, the California Department of Tax and Fee Administration, the CDTFA, and the Employment Development Department, the EDD. They all have the legal authority to dig into old, dormant, or missing tax return calendar years, far beyond what the IRS typically does. If you think the state forgot or that old tax years are too far back, you're putting yourself at massive risk. Before you respond to anything from California, but before the state finds you first, you need to understand how far back each California tax agency can reach and what triggers their civil and criminal investigations. Hi, I'm David W. Klasing, a dual licensed tax attorney and CPA, and for nearly 30 years I've defended clients throughout California, nationally and internationally, against the FTB, CDTFA, and EDD in audits, assessments, collections, and criminal tax investigations, and where possible, in voluntary disclosures. Unfiled California taxes are dangerous, and the state has more tools than you would ever expect to find them. Here's the general rule: no return, no statute of limitations whatsoever. California law is eminently clear. If you never filed a return for a given calendar year, there is no statute of limitations. This means the FTB can assess tax at any time. The CDTFA can issue determinations indefinitely. The EDD can assess payroll tax on tax years that go really far back. Penalties and interest accumulate for every year they assess all the way forward. And a pattern of unfiled returns can trigger criminal tax exposure. Missing return is considered an open file permanently. The Franchise Tax Board has some of the strongest enforcement powers in the nation. The FTB can go back forever. If you never filed a return, you filed a false or fraudulent return, you filed as a non-resident but were actually a California resident, you had California source taxable income that ignored California filing requirements. If you filed a legitimate complete return, the FTB usually has 4 years to audit. But if you didn't file, they can go back 10, 20, or even 30 years if the income records exist. The FTB will often reconstruct income from 1099s, W-2s, bank records, cryptos exchanges, and from Franchise Tax Board data sharing programs, IRS files, employer payroll reports. They will not hesitate to assess every year they can justify. How far back can the CDTFA go? The CDTFA, they oversee California tax, use tax, excise tax, cannabis tax, and fuel tax. They are very aggressive with unfiled returns. If you never filed California sales tax returns, the CDTFA can reconstruct every quarter using bank deposits analysis, point of sales data, vendor reports, marketplace facilitator records, Yelp, Uber Eats, and DoorDash data, and inventory purchases data. The CDTFA can estimate your tax liability and issue a determination that includes tax, interest, fraud or negligence penalties ranging between 10 and 40%, additional penalties for failure to file. There is no limit practically to how far back the CDTFA can assess when California returns were not filed. How far back can the EDD go? California's Employment Development Department. They handle payroll taxes, unemployment insurance, and worker classification issues. If you never filed California payroll tax returns, or you misclassified employees as contractors, The EDD can go back in an unlimited number of years as long as they can justify it with the proper records. The EDD often uses bank statements, payments to contractors, 1099 NEC records, employee interviews, social media data, business credit card statements. If they determine misclassification of workers, the EDD can retroactively assess payroll taxes, penalties, and interest. They can hit you with late deposit penalties. They can hit you with fraud penalties. These additional assessments could often exceed the underlying employment tax at issue. The most dangerous California trigger is IRS data sharing. California agencies constantly share information with the IRS and vice versa, including missing return information, estimated tax notices, employer mismatches, residency discrepancies, offshore income indicators, crypto transaction data, and sales tax inconsistencies. If the IRS identifies unfiled federal years, the FTB, the CDTFA, and the EDD often receive that information from the IRS automatically. If California identifies unfiled state years, the IRS gets information from the state. Thus, a single missing tax year could start a multiple agency chain reaction. Once California decides to pursue unfiled years, you may face estimated assessments, wage garnishments, bank levies, tax liens, driver's license suspension, and business license revocation, asset seizures, and if all goes to hell, a criminal tax referral, if they thought you acted willfully. Even if you owed very little tax originally, penalties and interest can multiply that balance dramatically. Do not wait for California to escalate your case. The safest way to address unfiled California taxes is through a voluntary disclosure where available for out-of-state taxpayers, protective filings, corrected or reconstructed returns, attorney-protected accounting, negotiated penalty relief, limiting the state's look-back period, coordinating with the IRS to avoid double assessments. Handled correctly, you can dramatically reduce penalties and avoid criminal tax exposure entirely. Handled incorrectly, your situation could get much worse, including jail time. Why you need an attorney CPA for old tax years. A dual licensed attorney and CPA can protect your communications through attorney-client privilege. We can reconstruct your old records privately, secretively. We can file back years safely. We can coordinate with the IRS. We can negotiate penalty removal. We can handle CDTFA and EDD interviews. And whatever happens, we can prevent criminal tax referral. We can limit the number of years the state can assess in certain situations. Accountants simply cannot protect your communications. Only an attorney can provide legal privilege and control the very strategy needed to prevent your case from escalating civilly or criminally. If you have unfiled tax years in California, whether with the FTB, the CDTFA, or the EDD, don't wait and don't respond on your own. The state can go back far longer than you would ever expect, and one mistake can trigger massive penalties, or worst of all, criminal tax exposure. Call the tax law offices of David W. Klasing at 800-681-1295 or visit klasingandassociates.com to schedule a reduced rate initial consultation today. We'll help you fix unfiled tax years, we'll limit your civil and criminal exposure, and we will protect your future. Thank you.